Hello there. Looking at gold, we have finally seen a noticeable, actually a significant correction in gold price, where it dropped by over 11% since mid-October. And the main question going forward is whether this significant correction is enough to give us an intermediate cycle low, or is there more price softness to expect in the near future? So let's talk about that, and welcome to My Finance Teacher. As usual, I would like to start with looking at what's going on to the US dollar, although this negative correlation between gold and US dollar might not be as strong as it used to be in the past. On the US dollar, in fact, as well as on gold as well, I see a couple of scenarios. We see a new intermediate cycle on US dollar starting over here in the second half of April, and the main question for those couple of possible scenarios is if that intermediate cycle has actually finished in the middle of September, giving us a rather short intermediate cycle lasting for only 149 days. That is quite possible though, as we've seen a couple of pretty long cycles in the US dollar. It's not unusual to see a shortened cycle after a couple of long ones to even out that average typical duration. So in this scenario, if dollar has started a new cycle, a new intermediate cycle, then while yes, there will be a correction down into the first daily cycle over the next perhaps 2 to 3 weeks, the trend will probably stay upwards, putting some additional pressure on gold price. This in fact is a quite likely scenario, but both of the scenarios are pretty close in their likelihood. I would give this scenario perhaps 55% chance, with a 45% chance given to the scenario that the intermediate cycle in the US dollar is still ongoing and we are going to see yet another extended intermediate cycle in the US dollar. And with the daily cycle at 42 days long already, and with these daily cycles usually lasting for only a couple of months, it's quite likely that the dollar will start its correction down into a more recognizable intermediate cycle low again over the next 2 to 3 weeks. So these are the scenarios I see on the US dollar. And looking at market sentiment, that's a dollar index sentiment, we don't see much disagreement with it. After all, over the last few weeks, with this recent low in mid-September, dollar optimism index did drop all the way down to below the level of 30, which historically is quite enough for an intermediate cycle low. Of course, there are some periods, as in say second half of 2020, when the market sentiment on the US dollar drops significantly further down. Nevertheless, most of the patterns suggest that a rally into a new intermediate cycle in the US dollar is quite likely, hence a 55% chance to that. But again, given the slightly shorter than average duration for such intermediate cycle, another dip down is still quite likely as well. Next, looking at the gold price itself, I think it's pretty clear that the intermediate cycle has topped over here in the second half of October. We see the 14-day RSI quite far into overbought at over 87. Since then, this correction down to below the neutral level, below the level of 50, might actually mean that the low yesterday turns out to be the intermediate cycle low, with gold pushing significantly higher over the next few months. That again would give us a slightly shorter than average intermediate cycle at only 166 days. But again, that's not out of ordinary, although usually these intermediate cycles last for close to 180 days or half a year. This scenario of significant strength in gold aligns well with the slightly less likely, the 45% chance scenario of dollar going down again into a more recognizable intermediate cycle low. Although again lately this negative correlation between gold price and the US dollar index hasn't been as strong as it used to be. In either case, a slightly more likely scenario in my opinion, perhaps at least a 55% chance scenario, is that we only start a new daily cycle low here, while a more sizable correction down into a more recognizable intermediate cycle low is still ahead of us, which of course would give us a very interesting buying opportunity before gold is ready to rally into a new intermediate cycle. And as for some potential targets, if we throw in these Fibonacci retracement numbers, among some interesting possibilities, that's exactly where my drawing turned out to be. That's a 62% retracement, aligns pretty well with this round number of 3,700. Both such Fib retracement levels at 62% as well as round numbers often do turn out to be either support or resistance levels, in this case perhaps a possible support zone. So if you are trying to catch some of these bounce, I would suggest to be somewhat cautious with those stops. After all, looking at market sentiment in gold, while it has dropped quite a lot from the recent high at 86, that's the highest in a couple of years at least, all the way down to only 72, nevertheless, a couple of previous intermediate cycle lows were accompanied by sentiment dropping all the way down to low 60s. Within this longer-term process of gold pushing above $4,000. So again, even within those relatively mild intermediate cycle lows, market sentiment still dropped to mid-60s or below that. So while it's still above 70, I'd be likely waiting for a nicer buying opportunity. That's all from me. Remember, nobody does know the future. I simply share my opinion with you. And in return, I'm curious of your opinion. Which are we going to see first, 3,700 or 4,500? Let me know down in the comments below. Have a wonderful Wednesday. Bye bye.